Good afternoon, everybody. Thanks very much for joining us. Really interesting session that we've got this afternoon, which is going to be focused on the Netherlands real estate. And it's the first of a series that we're doing here with GARBE. So really interesting to be picking up that. Great speakers here. We've got René Buck, President and CEO of BCI Global. We've got Michiel Dubois, who's Managing Director for GARBE Institutional Capital, and Maurits Smit, who's Managing Director Netherlands for GARBE Industrial Real Estate. So we're going to be looking across the sectors. We're going to be covering both the life sciences side and the residential side, and of course the logistics side. But let's first of all start maybe with you, Michiel, just to give a kind of overview, I suppose, of GARBE, but also some of that sort of residential side, and then we'll pick up with René's presentation, which is going to pick up much more on the life sciences and also the logistics side. But Michiel, let's start with you.
Yes, thank you, Richard. Thank you all for joining this seminar. We made a brief presentation, but we really appreciate that you're all there. Let me start with giving a brief introduction on GARBE. GARBE is an old company, so to say. We were established in 1965, so we have over 50 years of experience. By now, we have built out a European platform with 13 billion assets under management and 350 employees. We take ESG very seriously. We recently joined UN PRI, and we have various investment funds for various clients with high standards for ESG. So this is really something that we take very seriously. We are a real estate investment manager and a developer. And as such, we cover all sectors, but we really have three strong convictions. And the convictions are logistics, science and tech, and residential. We do this through a 360-degree approach, as we call it. Basically, that means that we do the whole property value chain, meaning we do property management, asset management, fund management, development, and acquisitions and dispositions. So in good times and bad times, we are willing to make our hands dirty to get the return that we promised you. So why GARBE Netherlands? 4 years ago, our two shareholders came to the conclusion that they were great. They had a great position, more or less a market leader as a private company in logistics in Germany, but they set out two new strategic goals. The first one was to expand logistics outside Germany. More and more clients were asking for this. And the other big strategic change was also to go beyond logistics, i.e. in other sectors like science and tech and like residential. As such, we opened our first office in the Netherlands. And the Netherlands is from, let's say, not only from an economic perspective, but also from a cultural perspective, quite close to Germany. And the saying goes that if Germany sneezes, the Netherlands has a cough. So we are very closely aligned with our economies, etc. We started off in 2018 with about 500 million assets under management, which quickly grew to 600. And through buying and selling, because we're quite an active investment manager, we're not asset collectors, we were able to move it up to almost 1.8 billion assets under management, with a huge, of which a huge part of the growth was logistics. We also grew our team. We grew our team from more or less 4 or 5 employees in 2018 to today 27 professionals. And we cover all the disciplines that we need. We have in our team in Amsterdam, we have fund management expertise, we have development expertise, we have property management expertise, we have asset management expertise, but we also have, for example, an ESG specialist. So we're very proud of our team, and they're doing a great job. And here you can see a sample of the properties that we have under management. We started off with 80 properties, but since we are, again, not asset collectors, but buying and selling to try to get the best return for our shareholders, we today at 70 properties. So we have less properties, but more assets under management. This is also caused by logistic assets, which are often quite large, and as such have a big investment sum. But what you see on this page is, for example, you see some resi buildings, you see some high street retail, you see some offices, and you see some value-add projects. Now, I will also explain a little bit about the residential market before handing it over to René for the logistics and the science and tech. On the left side, you see a picture of the Netherlands, and you see where the demand for houses is versus the supply. And you see, especially in the economic stronger regions, the orange and the red part of the Netherlands, you see that the demand, the shortage is there. So why is the shortage there? The shortage is there because we have population growth and household growth, demand, while supply is lagging. And you see that in the line graph, because actually we would need about 100,000 new homes per year. But even in 2023, you see the line going down. We don't even make it for the 50,000. And these are not even produced houses. These are houses that are permitted to be built. In the bar graph below, you will also see that up to 2050, so that's like more than 25 years from now, we still have a strong housing shortage. The supply is lacked currently because first of all, we have a construction crisis in the sense that there's lack of capacity and the construction prices are increasing due to the war in Ukraine. We have a nitrogen emission problem. I think that René or Maurits will also pick on that later, but basically this will hurt construction even more. We have a very long process of getting permits to build houses. So all these factors together, including rising interest rates that we now also incurred in the last couple of months, makes it difficult to keep the production up. This is the last slide on residential real estate. And of course, later on, we have a discussion, so I'm happy to answer any questions. But on the two pie charts left above, you can see the structure of the Dutch residential market. And what you see is that most of the residential market is actually owner-occupied. And on top of that, we have quite a large social housing association market. They own more than 2 million of the residential units of in total 8 million. So actually, there's a limited market in which institutional investors are active, and institutional investors, for example, only own together like 200 of the 8 million residential units. On the right side, you see the investment activity in residential real estate. After the financial crisis, the investment in residential real estate picked really up, but in the last years, also due to increases in transfer taxes and discussions on rent control, the inflow, especially also of foreign institutional investors into the Netherlands, diminished. Transfer taxes were from 2020 to 2021 quadrupled from 2% to 8%, and next year they will even exceed the 10%. So taking it overall, residential real estate is a great investment class to invest in, because it has very strong fundamental drivers, and it also proved over time to provide a great inflation hedge. However, the lack of supply results in more and more pressure on the existing housing stock, and also that the free market part of the residential market is more under pressure. So rents were increased there quite good, and the reaction of the government is to expand the rent control from about 750 euros per month to 1,000 euros per month. This would reduce the free market rent to a smaller portion. Now, don't get me wrong, rent control is not per se bad. I'm in favor of a free market, but the situation that also a consequence of the rent control is that the supply is lagging because it's not productive for investors to invest in new houses, because the return on their investment is not high enough due to the rent control. This means that there is this fundamental demand continues. Plus, over time, rent control did result in more or less on inflation-linked rents. So it does provide a great investment for especially investors are looking for an inflation hedge. We do not agree with the expansion of the rent control. We also do not agree that the transfer tax is increased to 10%. We think this is not a solution to a problem. The problem is not dividing the existing stock. The only truly long-term solution is to build more houses and to create additional supply. And with this, I would like to hand it back to Richard.
Great. Thanks very much, Michiel. Really interesting, I think, to get that perspective on some of those areas, particularly around the residential side, with challenges that we're also seeing, I think, across Europe. Now to hand over to you, René, and of course, very interesting to pick up on your views. We've done presentations before, and I'm always intrigued to see kind of what your take is on the market and what you're seeing in terms of the research side. So over to you, René.
Thank you very much, Richard, and the GARBE team for having me this afternoon. Michiel already talked about residential. Let's take a closer look at the commercial real estate. And what I want to do is go quickly over three topics. It's more the macroeconomic side, trends which we see unfolding currently in the Netherlands. Then talk about logistics, real estate, and then the last category is more on science and tech buildings or industrial parks, which focus on science and technology. If we look to the macroeconomic trends, and you see here on the left-hand side the real growth of the economy, what we have done is Germany is dark blue, the Netherlands is light blue, and the European Union is in red. So to put the Dutch results into perspective, you have to focus on the light blue bars. What you can obviously see is that 2021 was a positive year in terms of economic growth. These are, by the way, the latest IMF projections from a couple of weeks ago. You can also see that for the Netherlands for this year, the economic growth is still positively forecasted, although I have to say that the Dutch Planning Office yesterday came with less favorable results, but at least this gives the international comparison all over the board. You can also see that next year will be in various countries and all over Europe a difficult year. We obviously know that. And it's obviously also definitely depending on the uncertain times we have these days. So for this year, not a bad year, I would say, if you take all the war in Ukraine into account, the high inflation rates, the economic projections, but next year will not be easy all over the European Union. But despite these, let's say, moderate economic forecasts, you can see that the unemployment rate, here again, follow the light blue line, that the unemployment rate is not doing bad. So we have an economy which is not growing anymore, or only to a very small extent. But on the other hand, we have a tight labor market. A tight labor market in terms of that the unemployment is relatively low. So one of the interesting elements, what we're going to see the next year, and I think it will be in more European countries, is that we see that the economy is slowing down, but you don't see it in employment and unemployment figures. If I go to the next slide, it's on inflation. And the inflation, and you can see here on again, the light blue bar is the Netherlands. That inflation is in the Netherlands really high this year. It's also forecasted for next year by the IMF as above German and above European level. So it's something which is really where you have to take into account. Obviously, annual projections are different than month-to-month projections. So, for example, the latest figure on a monthly basis was 14%, which is pretty high. At least I have never seen that in my career. But overall, you see inflation is influencing and is obviously also making the price of money more higher. Means also that in comparison, and you can see that on the right-hand side with 10-year bond yields, real estate is becoming more expensive and investors have other opportunities as well. So it's an interesting environment. It's a difficult environment, and it's also an uncertain environment. And uncertainty has to do with the war in Ukraine, what's going to happen with energy prices, and energy, not only energy prices, but also energy security, the certainty of delivery. So in that environment, you also have to look into where are interesting opportunities. And let's first look into logistics real estate. Here you see on the left-hand side the investment volume and the prime yield. Investment volume was in 2021 very high, probably this year at the same or a little bit lower level. You see now the prime yields going up a little bit again. So the very low yields we had on industrial and logistics real estate, that time is over. You can also see on the right-hand side that the take-up volume, let's say from tenants, and not from an investment perspective, from a tenant perspective, that the take-up volumes are a little bit more limited, but the vacancy rate, you can see that there, is very low. Let me give you a little bit background on, because a market is like any market, is a matter of demand and supply. So what are the demand drivers? One of the reasons why and you see that on 2021, why that was so high from a tenant perspective and from an investment perspective, is obviously that due to the fact that a lot of the supply chains were disrupted, companies answered by having higher inventory levels, because if you have more stock, and if something happens, whether it's a ship in the Suez Canal, or there is anywhere in the world a natural disaster, or a sudden lockdown anywhere in China, with more inventory, you can still keep on delivering to your clients. We see also that companies are reconsidering their footprint. And for many manufacturing companies, European companies, but also American companies, have a strong footprint, manufacturing footprint, strong manufacturing capacity in China and Asia. And they are now looking into, hey, is that smart for the future? Should we not have a more resilient footprint? So they decentralize their production, sometimes also called as reshoring, meaning that part of the production capacity in Asia is brought back to Europe, or on the other hand, is brought back to the US, if it's a US company. I think on the demand side, it's also fair to say that we have a leveling off of the growth of e-commerce. Obviously, in the middle of the COVID-19 pandemic, you saw that e-commerce growth figures were going through the roof, and we see now a leveling off. And it will probably also be the case as we are going into a recession. Due to the high inflation rates, we see that consumer expenditures and business confidence levels are a little bit lower than earlier this year. So that will have an impact on the demand as well. But while the demand drivers are still solid, even though not that fantastic as the last 2 years, in the Netherlands, we have also to keep in mind that there is a supply shortage. Supply shortage because the pipeline of new greenfield industrial areas has come down. You could say the pertinent authorities in the Netherlands who are there for spatial planning focused more on how to mitigate the negative impacts of COVID-19 and forgot to deliver new industrial estates once the economy is recovering. There is also in the Netherlands a debate on what is really the benefit of mega distribution centers. So XXL warehouses, defined as warehouses of more than 40,000 square meters, more or less for 100,000 square foot. And we see that the public exception of that is less. People are wondering, hey, what is the added value of all these large distribution centers in the Netherlands? As it is also a small country, as you know. So with 17, 18 million people, limited surface, there's always a battle for space. And the question then is, what is the part of the logistics real estate? It means also that if you are in the logistics real estate like GARBE and you find the right spots and the right assets and the right locations, you can be very you can have a very positive business case anyway. And there is also a nitrogen issue. Nitrogen means that close to natural amenities, natural designed areas, that it's not easy anymore to get building permits there. It's a typical problem you see in the more European countries, but again, due to the fact that the Netherlands is small and that a lot of activities have to take place in that area. So nitrogen, that's really a specific national discussion, is limiting the number of building permits, is putting a lot of regulatory burden on new developments taking place. Another element in logistics real estate is obviously prime rents. People who are familiar with the Netherlands recognize, because sometimes locations are very small villages or cities, but they are recognized as logistics hotspots. Obviously, in Amsterdam and Rotterdam, which are home to the Amsterdam Schiphol Airport and to the largest seaport, one of the largest seaports in Europe and in the world, actually, rent levels are higher there. But this is for new logistics real estate due to the contracts mainly used in often real estate. Inflation is hedged. That means that let's say the tenants have just to pay more in 2023 for their current logistics real estate as they did before. So all in all, if you talk about logistics real estate, strong, the fundamentals are still strong in demand, leveling off a little bit, but due to the fact that the supply is limited, it means that there is a hot market and that tenants, investors and developers are all looking for where are opportunities to still provide the right supply for companies who are looking for warehousing space or distribution space. Now let's go to the more science and tech. And I said here buildings and parks, because what we see happening in the Netherlands, but it's also in other European countries, is that areas of innovation, I call that as a kind of term for science park, technology park, university campuses, call it areas of innovation. That we see that for many companies, the battle for talent, for new products, new processes, new technologies, means that they want to be close to each other, because they also understand that you cannot do it only as yourself. So if you want to innovate, if you want to accelerate your research and development as an industrial manufacturer, for example, it makes sense to take advantage of universities, of technological institutes. And that's what we see in various countries, because the time that you could think as a company, we can do it all ourselves, that time is over. So you want to locate your R&D facilities or even your manufacturing operations close to these know-how magnets, because that bit of know-how can you use to make your R&D efforts smarter, simpler, more cost-effective, and more effective as a whole. And we call that process open innovation. And then if you want to innovate openly with partners, with technology institute, with startups, then it's an advantage to be close to each other. So I'm not saying that all these companies work all over the world, but crossovers between various industries and working together with colleagues from universities or other companies, life makes it easier if you are close to each other. And that's the reason why we see, not only in the Netherlands, but the Netherlands is pretty strong in that, but also in other European countries and American states, that area of that these areas of innovation, these technology parks, these tech parks, facilitate open innovation, that they attract the right talent to that, and that it makes a focal point also for companies and businesses who want to locate there. And just as an example, in the Netherlands, you see that if we look to the science parks and technology parks we have in the Netherlands, their growth in terms of people and in terms of real estate is 3 times as high as the average in the municipalities where these science parks are located. So it's an interesting phenomena. We're also from a real estate development and investment perspective is interesting. And the reason why it's so interesting is because it matches the boxes of what companies are looking for. So if a company wants to set up a new research and development center, and in these areas of innovation, science and technology parks, area space dedicated for technology-driven companies, you find available qualified personnel, you find world-class institutes and universities, you will find the opportunities to cooperate with institutes and companies. So there are interesting opportunities in those locations to be successful. And here you see an overview. It's only from 2018, the latest. Let's say there will be an update in 2023 on all these campuses, science parks. You know, there's a slight difference in the terminology, but you see here where they are. So you have some of them are mature. That's in green. Some of them are in the growth phase. Some of them are only in the early stage, and some are still in the idea phase, in the phase of, hey, should this be a technology in combination with a location which would make sense? So the story about these science parks and campuses is that it is a very interesting market, growing because the companies are growing, and whatever the recession will do or economic downturn, the need for companies to innovate, to have more impactful results of the research and development takes place. And so with that, Richard, I tried to give a glimpse on macroeconomic forecast, talked quickly about logistics, real estate market, and this science and tech market, and give the floor back to you.
I think it'd be interesting just to pick up on some of those points. And maybe it makes sense, Maurits, just to come to you first in terms of the logistics side. I suppose, what are you seeing? Renee talked a little bit about some of the drivers there, but what are you seeing in terms of the, I suppose, the investment opportunity and what's driving the logistics side from your point of view?
Yeah, thank you, Richard, for the question. And let's give me indeed also some background. Like Michiel already mentioned at the start, and thereafter Renee more established, the Netherlands does have strong fundamentals to invest in. And more in general speaking, the Netherlands is the 6th most competitive nation in the world to the IMD. And that is based on a strong economic performance, the governmental efficiency, and the business efficiency and infrastructure. So more general, the Netherlands is compared to other countries, it is still a solid country to do investments. And then back to your question, why logistics, and why is investing in logistics in the Netherlands interesting? And before go to the drivers, I think it's also good that to look a little bit more at the from a traditional perspective, that the Netherlands is a trading country. So meaning that we are a country, and we do have in our blood the business mentality, I would say, but also in the country the facilities that are designed for logistics. So that's more from traditional point of view. Looking at the other drivers, and I will try to stick to 3 drivers in here. One is the location. From a strategic point of view, together with the harbor of Rotterdam and Schiphol Airport, but also the railway connection to China, etc., we are strategic, very good orientated in Europe. By saying this, it's also that the south of the Netherlands is there's a lot of industry activities next to the border of Belgium, for example, and to the Ruhr area of Germany. And that's the reason why a lot of powerful logistics partners want to establish here. So the key driver is again, and in I think real estate we hear it more often. It's location, location, location. Location is one of the key drivers. The second one is the infrastructure, like already mentioned. We do have attractive and efficient infrastructure, with efficient airports, railway, waterways, and ports. So that is, I think, the key driver, or the second key driver in here. And last and not least, and it's already mentioned by René, is that we do have high demand, mainly for high quality warehouse space. And secondly, we do have a very low supply. And it was already, we could see it in René's picture of illustration, that it's at the moment below 1%. That's very low from traditional perspective. I didn't see below 1%. And the other element I think that is interesting is the amount of e-commerce activities. We are currently using roughly 20% of all the goods that we order, we do online. We expect that it will increase on the long term to 30% in 2030. That means that a lot of new logistics is needed, especially around the bigger cities for the last mile activities. So, looking at the key drivers, I would go back more general that the Netherlands is a solid investment country to invest in. Secondly, it is in our blood to trade, and also the country is organized in such a way. Thirdly, the strategic location. Fourth, infrastructure, and last but not least is that the demand and the supply is quite interesting, and it already showed, and it will show a rental increase.
Okay, good. I've got a question that's come in online. Thanks very much for that, to everybody for joining us online, and do continue to put those questions in. Thanks, Toby, for yours. I'm going to come to Michiel with that in a minute. But just coming back to you, Moritz, on this, there's a question that was, you can also vote on those questions as well. I can see this has already had 3 votes on this one, so people are obviously keen to have it answered. Do you see strong demand for smaller industrial warehouse units of less than 2,000 square meters on a multi-unit estate, as there's very little supply either currently or proposed? And I think maybe that picks up that point around the sort of smaller e-commerce style units as well, Moritz. So I suppose, what are you saying? Are you seeing strong demand there?
Yeah, the answer is yes. However, location is important again. The smaller assets is for the last mile distribution. So it will be next to the larger cities for the e-commerce activities.
Okay, great. Let's just pick up. I think if we pick up on one of these points, I suppose, with you, Michiel, there was mention there from René about the life sciences side. What are you saying in terms of some of the demand drivers? It's interesting to see, particularly in the UK, there being a focus on life sciences, but also those innovation centres moving closer into cities, whether that's Glasgow, Edinburgh, or even London and into Docklands. Well, what's the situation there in the Netherlands?
Yeah, thank you, Richard. Let's first take a little step back. Why we are interested in science and tech assets. We saw actually that in the US, this is actually quite an established asset class. I think they are 10 years ahead of us, and the same goes for the UK, which is more or less 4 or 5 years ahead of us. And also there you see indeed some of these companies moving into the city. But the interest that we have in science and tech assets is because we think research and development is really becoming a lot more important. We have underinvested in the recent years in research and development, and also the European Committee, the EC, saw it, and now they have this Horizon program, which is going to invest 100 billion in the next 7 years into R&D. We also see that, for example, the life expectancy of increased over the last 50 years with 10 years. So we used to get up to, on average, to 70 years life. Now it's 80. Now this goes together with more chronic diseases and, for example, also more lifestyle diseases, which needs to be managed. We also see in medication that it goes from a generic treatment to a much more personalized treatment. And examples of these are, of course, the science and tech innovation that we are seeing for example, of course, the COVID-19, which was really a great collaboration of many life science companies to get this vaccine so quickly up and running. And it also relates to what René was talking about you should be together, you should exchange information. You know, it's not all about competition, it's all about collaboration. But for example, also about drones. I mean, if you see what the development that we had with drones over the last couple of years and how we can implement those science and tech thinking now in concrete products, that's really a change versus the past. Now, going into cities, I think, yes, we see absolutely a trend. The trend has much to do with that the labor force wants to have also the cultural and they want to live nicely. They want to meet people. They want to be in bars, etc. So a science park is quite remote, and sometimes for the right reasons, because there is some stuff that, let me put it like this, that you shouldn't try at home, right? I mean, you don't want to have a wet lab in your in your attic, and you don't want to start in your backyard exercising with drones and see whether they fly or not. So there are, it's not everything is able, of course, to move into the city. But yes, we do see the trend, but the trend is mostly driven for the hunt for talent, which is mostly, which wants to have a good quality of life, which is more close to the cities.
Okay, good. I'm going to pick this one up because this was deliberately for you, Michiel, as well here, which is, are you seeing a general theme of the major core investors slowing acquisitions activity across the Dutch markets and a rise in value-add and opportunistic investors? And sort of how do you see core investors adapting to keep their pipelines flowing through 2023? So feel free to pick up any of those. And Moritz, if you've got a view, or René on that it'd be interesting to pick up your view on that. So I suppose, are you seeing a slight pause in the market from core investors? Michiel, what's your sense of that?
Yeah, we do, in all honesty. Once again, we are active across the various investment styles. We are a developer. We do value add and we do core. But with the rising interest rates, in all honesty, bonds became an alternative again. Plus, low interest rates fueled, of course, also the investments in real estate, because there was no alternative, there was no yield. And as such, we expect in the going forward, and I think also Maurits sees it, so I think he can take it over this question, but we see it also across the board in all sectors. It depends a little bit. You still have equity buyers that still continue with buying at the current yields, but most core investors are a little bit in the wait and see mode. But with that, I would like to hand it over to Maurits.
Maurits, go ahead. It'd be good to get your perspective on it.
Yeah, I think I see the same trend as Michiel is seeing. I would not say it's on pause. I would say it's slowing down. So we do still see the core the deals going on, and even we are still investing in here in the logistic field. However, the pricing changed a little bit over the last months, I would say. So it is indeed slowing down. We do see more opportunistic capital coming in, and so yes, we do see it, but it's definitely slowing down. It's not on pause.
Okay, great. René, quick questions come in here as well. Thanks very much for all your questions. In life science, with such a large delta in yield targets between sellers and buyers, and the questioner is saying 2 to 3% in some cases. When do you predict we see the correction wave starting to affect sale prices in the Netherlands? So do you think there's going to be do you think there'll be a correction? Do you think there is a gap between buyers and sellers here in that market, René?
Yeah, actually, I do think so. I think that what you had a number of years ago, that the yields for these science and tech building, it's not only life sciences, by the way, it's also just for electronic designs and chip design, etc. So a number of years ago, that was really seen as an awkward asset class, or it wasn't really an asset class. It was like these strange buildings in areas close to universities with specific, particular restricting zoning plans, and that has changed. And I think what you see now is that the yields have come down, let's say from 7-8% now perhaps to 4% or so. But I think that the interest of and it starts all with the tenants, right? If the tenants want to be closer to university, closer to each other, in order to accelerate that innovation process, then real estate will has the task to provide the right buildings at that location. And I think the number of developers and investors who really specialize in these tech buildings. Michiel was already talking about wet labs, so buildings where you have 50% office space and 50% lab space. And people talk about clean rooms, but there are 23 different types of clean rooms, so which ones to have? So companies, the real estate developers and investors who specialize on that can really make the difference, because as mentioned before, it's not that investing in, even in the US, you have really stock listed companies only focusing on science and tech companies and science and tech buildings and science and tech parks. That's not yet the case in the Netherlands. So companies who really try to make real estate companies who try to make a difference there have an interesting opportunity, because that drive of companies to work together with other companies to bring new products, new processes, new platforms, that drive that's not evaporating. That will be there for the next 5 to 10 years at least, and it's even accelerating. So it's an interesting, not very much discovered market yet, where there are opportunities for real estate companies who want to specialize in science and tech.
Yeah, I think that's an interesting area. I mean, and I'll come back to that in a minute, René, because we've been doing, sessions around advanced technology and satellites and space and those kinds of things, which would never have really been perceived to be real estate focused topics in a way, but because there's more of an interest in the real estate behind that, then I think it'd be interesting to see how some of these grow. Michiel, I just wanted to come to you. I mean, René mentioned briefly the sort of some of the macroeconomic outlook elements, some of the challenges that there are in the market. I suppose, how do you see those from your perspective? Has that led to you mentioned there that you're seeing less, a pause from some investors. What's that meant, I suppose, for your investment strategy? Have there been changes? How are you adapting to the situation, I suppose?
The way we are adapting is that we are more on the. I agree with René that not everything, not everybody adjusted to the pricing, right? A colleague of mine said, sellers want yesterday prices and buyers want tomorrow's prices. And I think we're a little bit in this situation. And you can see, with my white hair, that I've been around the block. So I experienced this, which is actually the same as the previous crisis. So we are now seeing less transactions because of the situation where we're in. And I think that the stronger investment managers and the stronger developers, they will sit it out and they will survive and they will wait for better times. But with the rising construction prices and the rising interest rates, not everybody will is our expectation, be around next year. And we are an active investment manager. We have our own development company, for example, in Germany. So we are also we can, let's say, take the opportunities that are coming forward in the coming years in different ways. So we are also looking, for example, at taking over other platforms or taking over asset management mandates from other investment managers. At the same time, from a true real estate perspective, we are more now in the development, looking into developments and looking into the value add also, because we think we can, for example, through a develop to hold strategy, we can give that extra return to our investors, which they are currently requiring versus buying standing assets.
But I think also, Michiel, that what we see is that companies who came into the logistics real estate market are, to a certain extent, also leaving again. In 2020 and 2021, in the middle of the pandemic, logistics real estate, there was still demand for that. E-commerce went through the roof. The other asset classes like offices and hotels were obviously not interesting anymore. So a number of investors changed their portfolio in terms of having a stronger performance in the logistics real estate market. And I think that with the cooling off of that logistics real estate market a little bit, with also the higher interest rates, I think a number of these people who came in will flee again. And that companies who are there already in there for decades, like your own company, are still there with their professionalism and with their views on how in an upgoing or a downward market, whatever the market is, to make a good profit for your clients.
No, I agree absolutely, and especially also in the logistics, we are entering into many developments, which when they will hit the market, we expect the market will be recovered. But Maurits can talk a little bit more about that.
Yeah, it'd be good to pick that up from your side, Maurits, I think, because there's a lot of discussion around particularly from the development side, whether spec development makes sense, especially development to sell, for example. But interesting that you picked up, Michiel, that point around the develop to hold strategy. So good to get your perspective, Maurits.
Yeah, definitely. And thank you for that question. Let's start by answering this question that GARBE is not in the Netherlands for a few years. We want to establish here for long term. So we are having discussions with current tenants to do extension on current buildings, looking how we can improve the sustainability of the building in times like these, to do investments along with the tenant to see how we can lower their costs. So we are I would say we are active manager here for long term. What we do see as well is our opportunities or development opportunities within our portfolio. So we are working on several developments in which we already own, or our investors currently own, the option or the building itself that can be extended or can be rebuilt. Looking at our investment profile, and Michiel already touched upon it, is we do have different investment vehicles, and we do have vehicles as well where we can do developments and we can hold it thereafter, and in that way we can be sure that the developer, or that the investor in the long term can make its performance by using the development the opportunities that are arising in these markets. So we are here for long term. We are doing more and more development to hold, and we do active management. Saying something a little bit about the spec developments, which we are also doing. We will start in a few weeks the first ones. What we do see is that financing will be challenging. Spec financing in the Netherlands is a hard thing to get. So the normal banks are at the moment not willing. So we have to go to debt providers. which are charging a lot of cost for sure. So it's quite expensive to do spec developments. On the other side, you do have the potential that with the increase in rent or the expected increase in rent, that it can be extra profitable in the end. So it's spec developments are more difficult these days, but it's definitely also something that we are doing and that we are continuing doing.
Okay, good. Another question's come in. Thanks very much for that on the life sciences side. So René, Michiel, whichever of you wants to pick that up, or indeed both. And somebody just pointing out that, or mentioning that in the US market, particularly Boston, seems to be moving much more to a kind of tenant-led market just because of the huge amount of space that's been added. And so therefore, is there a danger of that also in the Netherlands market? Are we adding more space? Are we going, ahead of demand? So are we at risk of seeing that? I don't know what your perspective is there, René or Michiel.
René, you want to go first?
Yeah, I think that risk is not huge in Europe and also not in the Netherlands. I think Michiel pointed out earlier that in the tech and science business, real estate business, the US is far ahead. So huge take-ups, companies who only specialize. For example, if you talk about life sciences, which is only part of all technology-driven companies. So you have a number of developers and investors really specializing on that. So I think that risk of oversupply is not available. What you have to keep in mind, that's particular, Richard, for life sciences is, those companies always are, or they are nearly non-existent, or they go through the roof. So if you have a new drug, take an example, or a new medicine, what really works, then it doesn't work only for the Netherlands, it works for Europe, it works for the whole world, right? What we saw, for example, with vaccines. So what you see happening with life sciences companies is that relatively unpredictable on their growth. So we recently worked for a life sciences companies who want to set up in Europe, and then we have an intake in our US with our US teams, based teams, and then you get how many people do you expect to have the next years? Yeah, there will be something between 10 and 250. So wow, what a spec is that, right? If you multiply that with whatever 20 square meters or so, but it has to do with, does our product get approval? Is it really approved by the European Medicine Agency, which is the European counterpart of the FDA in the States? So life sciences is a bumpy business, but if you are successful, then you can really. I recall working for Amgen, the largest biotech company in the world. We worked for them when they had revenues of 40 million. Now it's about 20 billion. So, and that's typically for that business. But coming back to your question, the risk of oversupply in life sciences, buildings, incubators is not that huge. I think at the moment there is really a real demand for space, for lab space, for clean rooms, for companies who want to share that. So that risk is, I would say, for the next 3-4 years, not existing overall.
Okay.
Yeah, I would like to add that I agree 100% with René. The risk about companies going bust, which I also agree with him, because it has a lot to do about all or nothing, or there's very aggressive growth, or they go again, is that we really believe we are strong on the locations. So, and we're strong on the ecosystem. So there's also a point that René touched upon. The universities should be there, the municipalities should be there, and a lot of companies should be there to, let's say, make the science park or the cluster very robust. Because we know that although we might have walls of 10 years, either they are too short or they are too long. There are not that many tenants that really sit out the contractual length. The other thing I would like to point out is that, so from that perspective, we are not so much in favor of build to suit, because we have to take into account that what happens if this tenant leaves, whatever. The other thing is that René showed that we had 35 science parks in the Netherlands. In all honesty, we're not interested in all 35. We are prepared to, from a risk return perspective, to sometimes get into a park which is not there yet, because then there's an upside potential in the return. At the same time, I think for example, in the Netherlands, we will not invest in more than 4 or 5 parks, and because they have to be really strong. And we also look at it from a sort of European perspective. We're also looking at the UK, Germany, France. So that also, of course, has to do with that. We're not just a Dutch player.
Okay, good. There's only 5 minutes left. In fact, there's 3.5 minutes left. Quick question here. We'll have to answer this as quickly as we can. Quite a complex topic, though, I have to say, which is the growing trend to become less reliant on China, increased focus on sourcing products and services in the EU. How will that affect the Netherlands? So I guess, is that going to drive more specifically for the Netherlands rather than Europe as a whole?
If I can become as the first person to answer that question, yes, we see now that this being less dependent on China means that you produce or source your components and sub-assemblies more closer to the main European market. And that's definitely something we see happening now. I was recently quoted in the Wall Street Journal by saying, hey, reshoring was 5 years ago a topic at boring conferences, and now it's on the C-level agenda of companies. So it's really a topic there. But it's something which is very difficult to accommodate, because building up inventory just to be less dependent on deliveries from China is easier to do. You lease additional warehouse space. If you're really changing the manufacturing footprint, so where do we produce our products in the world? Those are tough decisions. Those are multi-million euro decisions. Those are decisions which is also within a company or causing a lot of stress and discussions. But this trend of being less dependent, the European Commission sometimes calls it strategic autonomy. That's also for individual companies. If you sell e-bikes, you don't want to be 100% dependent on all the stuff coming from China, because if there is a lockdown or if there is whatever happening at a port in the Shenzhen area or in Shanghai, you cannot deliver to your clients. So being less dependent on suppliers far away, as simple like that, that means that companies will produce or source more locally, and that goes obviously with a premium on cost, because that's what you do. Because there was a good reason why there are so many products produced in China, because it was easier and cheaper to do. If you want to do that next door, then there is a higher cost you have to accommodate. But not being able to provide your clients, like so many companies experience in the COVID period, that's what companies want to avoid in the future.
Great. We're very short on time, but I do want to just ask everybody this kind of last question in a way, which is looking at some of the opportunities. But I'd like in a way to look kind of sort of short term, but also medium term. Let's maybe start with you, Maurits, just in terms of where you're seeing the opportunities, and the short term opportunities and the medium term ones.
I think that looking at the current portfolio, it is within the portfolio, looking where as an active manager we can add value to the portfolio. I do see opportunities in the develop to hold strategy, and I do see opportunities in the rental increase for logistics.
Okay, great. Let's come to you, René. So what are you seeing, I guess, sort of short term, medium term? Where do you see those opportunities for investors?
I think that on the logistics real estate side, I echo what Maurits is saying. I think that on the logistics real estate, there are also the next 5 years enough opportunities, because I guess that the supply situation will be not change overnight. So even if the market for demand would cool off, then you still would see that supply is so limited that there is still an interesting market. And you posed that question earlier, Richard. It's not only about large super warehouses along the highways. It's also these relatively small, close to the inner city, last mile real estate solutions where companies are looking for. I think if we talk about science and tech buildings, a specific market, you have to know not only about real estate, but also about the ecosystem, how clusters work and what's going on in life sciences or the food sector of industry. I would say that's on the short and midterm promising still.
Great, super. And last word to you, Michiel, in terms of the sort of opportunities that you are seeing there.
Three targets. One, science and tech developments in the right parks. Two, manage to green in residential, meaning there's a lot of existing stock out there. It's difficult to buy or to develop new stock for the reason already explained. But we have a huge to do regarding making the existing buildings greener. And last but not least, on the lookout for broken deals coming forward next year.
Great, thanks very much. Really interesting to get those sorts of views on some of those opportunities. Coming up, we've got sessions on debt finance and investment next week in Frankfurt. If you're in Frankfurt, do join us there or online. We've also got a focus the following week as well in Asia. I'll be in Singapore doing our Investment Outlook 2023, Europe and Asia. So interesting to get the perspectives there across Europe and Asian capital flows, ESG, and the markets there. A focus on France and on logistics. And last of the sessions is on December the 13th, which is a GARBE Investment Briefing, particularly focused at Italy. So we'll be doing one of these sessions, but very much focused on the Italian market, which of course has seen huge growth. Thanks very much, Michiel. Thank you, Moritz and René. Really interesting to get your views. Thanks very much to everybody for joining us and your questions. Great to get such good views coming through on there and good things for us to discuss in the session. If you're watching this online, thank you very much for watching. If you're watching it on demand, thank you very much for watching. Thank you to everybody for joining us and look forward to seeing you at the next event.